Welcome to the deep dive. Today we're really cutting through the noise, digging into the latest market and economic news.
That's right. And we're basing this on a whole stack of sources you shared with us: WSJ, CNBC, Reuters, AP, CNN, New York Times, CBS, NPR. Quite the list.
Definitely. Our goal here is, well, to pull out the most important bits, maybe some surprising facts too, to help you understand what's actually going on out there.
Exactly. Get you the key takeaways quick and clear.
Okay, so let's jump in. We're looking at Tuesday, May 28th, 2025. And the overall market picture, according to these sources, it looked pretty good.
Yeah, actually, a very positive day for U.S. stocks. We saw some pretty solid gains across the board.
Like what specifically?
Well, the Dow climbed 1.78%, S&P 500 was up 2.05%, and the Nasdaq, it jumped a strong 2.47%.
Wow, okay. That's quite a move. So what was the main reason? What did the sources point to?
The consensus really seemed to be easing trade tensions, specifically between the U.S. and the EU. That seemed to be the main catalyst lifting spirits today.
Okay, easing trade tensions. That feels like a big deal, given, all the talk about tariffs lately. How does this kind of broad market sentiment, especially tied to trade, how does that matter for you, our listener?
Well, it really sets the whole economic mood, doesn't it? When there's optimism about trade, it tends to boost investor confidence that can, encourage more spending, more investment.
And the flip side?
The flip side is uncertainty. That makes businesses and consumers hesitate. So understanding that big picture really helps you put everything else from company news to your own plans into context.
Right. Speaking of company news, the sources were absolutely packed with individual stories today. Let's zoom in on some of those key developments. First up, a pretty significant acquisition in the tech world.
Yeah, this one's big. Reports say Salesforce is set to acquire Informatica.
Informatica. And the price tag?
It looks like $8 billion.
$8 billion.
Yeah.
That's major for Salesforce. What are they hoping to achieve with this, according to the reports?
So the stated goals are really about boosting their AI-driven data tools, helping margins, and basically grabbing a stronger foothold in that huge enterprise data market. Sources mentioned it's valued over $150 billion.
And contextual
It's
threat.
their biggest deal since they bought Slack.
Yeah.
So yeah, a major strategic move.
Okay, now here's a shift from huge enterprise software to GameStop. Making a rather unexpected move.
Unexpected is, yeah, definitely one word for it. GameStop reportedly made its first big crypto buy.
Crypto. How much are we talking?
They bought 4,710 Bitcoins. Cost them just over $512 million.
Wow. $500 million
Yeah.
in Bitcoin for GameStop. What's the thinking there? What do the sources say strategically?
It's being framed as, part of this broader strategy to try and revive the business. But, let's be honest, a lot of the reports noted analysts are kind of scratching their heads.
How so?
Well, wondering how holding that much Bitcoin, which is super volatile, directly solves their problems in like retail competition or e-commerce. It's a huge change to their balance sheet, adds a lot of risk.
But how did the market react initially?
Interestingly, the immediate reaction mentioned was positive. Shares apparently rose 3% pre-market just on this news.
Huh. Definitely a unique turnaround play. All right, let's shift gears again. Automotive sector. Stellantis, that's Jeep, Chrysler, Peugeot, etc. They had a couple of interesting news items.
Yeah, two main things popped up. First, that partnership they had with Amazon on the smart cockpit software, that's ended.
Okay, and the second?
They named a new CEO, Antonio Filosa. He takes over June 23rd.
And why now? What's the background context the sources provided for these changes?
Well, reports noted Stellantis is facing some pretty big challenges. They're seen as lagging a bit in the EV transition, and their North American sales have been slumping. So it looks like a move to maybe reset things leadership-wise and strategically.
Gotcha. Okay, moving over to retail now. Macy's reported earnings, but also adjusted their outlook.
They did. They cut their 2025 earnings per share forecast. The new range is $1.60 to $2 per share. That's down from, I think, $2.05 to $2.25 previously.
Not ideal. What reasons did they give for lowering the forecast?
The reports cited tariffs, unsurprisingly, and also needing to run higher promotions. So margin pressures, basically.
Even though they beat Q1 estimates.
Yeah, that's the interesting part. They actually beat Q1 numbers $4.6 billion in revenue, $0.68 EPS. But the sources added that context. The stock's down about 29% year to date. Their turnaround effort is clearly facing some serious headwinds.
Another leadership change reported this time at Instacart.
All right. Instacart named Chris Rogers as their new CEO. This is because Fidji Simo is moving over to OpenAI.
Okay, and Rogers.
He's set to take over August 15th. He joined back in 2019, former Apple exec.
Okay. Now, this next one feels like it touches on something broader. Societal trends hitting the business world. Retailers warning investors.
Yes, several sources highlighted this. Big names like Walmart, Target, others. They're apparently warning shareholders about specific financial risks.
Risk from what, exactly?
From growing consumer boycotts and legal threats.
And these boycotts and threats are linked to?
Directly linked to shifts in company policies around DEI, diversity, equity, and inclusion, and ESG, environmental, social, and governance. The reports suggest that the public reaction and legal challenges related to these corporate stances are now becoming, tangible business risks.
That's really interesting. How might these kinds of shifts, corporate policies on DEI, ESG, and the consumer blowback, how might that affect companies you deal with or invest in? It really shows how quickly cultural issues can impact the bottom line.
Absolutely. It means these aren't just PR issues anymore. They're now seen as potential financial risks that companies feel they need to disclose to investors. It really highlights that intersection of social issues and, corporate performance.
Okay, let's circle back to another company making a different sort of pivot. Trump Media, DJT.
Right. Trump Media is reportedly looking to raise a lot of money, $2.5 billion.
How are they planning to do that?
The structure mentioned is $1.5 billion in new shares and another $1 billion in convertible bonds.
$2.5 billion. And the purpose, what are they saying they'll do with it?
The stated purpose, according to the reports, is to build a major Bitcoin reserve.
Bitcoin again. So this is being framed as a strategic shift.
Exactly. A pivot away from just being a social media platform towards focusing more on crypto. And this is all happening while the company continues to report significant financial losses.
How did the market take the news, especially the part about issuing new shares?
Not well, apparently. Shares dropped over 10%. The concern mentioned was dilution. Issuing lots of new shares can reduce the value of existing ones, and investors often worry about that unless the money raised is clearly going to generate immediate value.
Right. Okay, shifting to the semiconductor world, ASML, a really critical company there, they've seen their market value drop.
Significantly, yes. Sources noted ASML has reportedly lost over $130 billion in market value just since July 2024.
Wow. What are the reasons being cited for that kind of decline?
Primarily U.S. export restrictions, especially affecting their sales to China, and just general uncertainty around tariffs. Those were the key factors mentioned putting pressure on the stock.
But is it all negative?
Not entirely. The sources also mentioned that some analysts still see potential upside. One projection noted was for a 17% increase from where it is now, despite these challenges.
Okay. Global Payments, another company making moves to streamline.
That's right. They're selling off their payroll unit. Buyer is Acrisure. Price is $1.1 billion.
And the goal there?
Pretty straightforward, according to reports. Streamline operations, return capital to shareholders. This actually follows a much bigger sale they did previously, like $13.5 billion for another unit. So it seems part of a bigger divestment strategy.
And speaking of strategy and shareholder value, Honeywell had some news on the governance front involving an activist investor.
Yes, Elliott Investment Management. Honeywell is adding one of Elliott's people, Mark Steinberg, to its board.
Why is that significant?
Well, Elliott has a huge stake, like $5 billion, and they've been pushing Honeywell pretty hard. Honeywell is planning to break up into 3 separate companies, and Elliott clearly wants to influence that process to unlock value.
Any sense of the potential value?
Sources mention some analysts think just the aerospace unit alone could be worth over $100 billion after the split, so Elliott sees a big prize there.
All right, let's talk innovation and space. SpaceX's Starship. There was a recent test flight.
There was. And it reached space, which is a big step, but the reports indicated it didn't quite hit all its key objectives.
What went wrong? What specifics were mentioned?
Reports mentioned the booster disintegrated during its descent and the main spacecraft lost control during re-entry. There were also issues noted with tank pressure and some deployment systems.
So concerns moving forward.
Yeah, it naturally raises some questions, especially since Starship is planned for really important NASA missions, like landing astronauts back on the moon. Reliability is key there.
Okay. And another Elon Musk venture, Neuralink, the brain implant company. news there too.
Yes, new funding. Neuralink reportedly raised $600 million.
At what valuation?
The reports put the valuation at $9 billion. This funding comes as they're moving forward with human trials for their brain implant.
And that implant technology recently gained some recognition.
It did. It earned FDA breakthrough device status, which can help speed up development and review.
Okay, one last bit of company news before we zoom out again. Shane, the fast fashion giant. IPO plans.
Yes, but maybe not where they originally wanted. Reports say Shane is now planning a Hong Kong IPO for 2025.
Why Hong Kong?
Apparently, they failed to get the necessary regulatory green light from China for a listing in London. London was seen as a potential alternative to the US, where they face a lot of scrutiny.
Are there challenges even with a Hong Kong listing?
Oh, definitely. Sources highlighted potential U.S. tariff hikes and maybe losing that duty-free access for small parcels. Those things could really hit their valuation hard, creating uncertainty wherever they list.
Okay, wow, that was a whirlwind tour of company news. Thanks for breaking all that down. Let's pull back again now and look at the broader economic landscape based on these sources. First thing that jumped out, U.S. consumer confidence.
Yeah, a significant jump there. Reports show it climbed to 98 in May.
And how significant is that reading?
It's pretty notable. It's actually the first increase we've seen since last November, and it's the largest single monthly jump since way back in March 2021.
What drove that jump, according to the sources?
A key driver mentioned was that progress we talked about earlier in trade talks seems to have boosted sentiment.
But any caveats?
Yes, definitely. The reports also stressed that uncertainty is still really high, especially with broader U.S. tariff policies still evolving under the Trump administration. It's not a clear path ahead.
Okay, so for you listening, why pay attention to consumer confidence? What might a jump like this signal, even with that caution flag?
Well, consumer confidence is often watched as a potential sort of leading indicator for future spending. And consumer spending is, a huge chunk of the U.S. economy.
So higher confidence means?
Generally, higher confidence suggests people might be more willing to open their wallets, which could boost economic growth down the line. So this jump could signal some underlying strength. But again, that trade uncertainty means it's not a sure thing.
Got it. And speaking of economic policy, the Federal Reserve, minutes from their last meeting are out today.
That's right. The FOMC minutes from the May meeting are due out at 2:00 p.m. Eastern today.
And what are markets expecting to see in those minutes? What's the vibe?
The general expectation reflected in the reports is that the minutes will show policymakers are still pretty cautious.
Cautious because?
Largely because of that same uncertainty around tariffs and what they might do to inflation and growth. So the thinking is the Fed's rate outlook is probably unchanged for now.
Meaning no rate changes soon.
Right. No change is expected until they get a clearer picture on either inflation trends or the job market. That said, markets themselves, they're currently pricing in potential rate cuts later this year, maybe September and December.
Interesting divergence there. Okay, let's hop overseas quickly. Australian inflation data came out.
It did. Consumer inflation in Australia reportedly held steady at 2.4% in April.
And how did that compare to expectations?
It was actually slightly higher than forecast. The reports mentioned rising health and travel costs were pushing it up, although that was partly offset by a sharp drop in fuel prices. Core inflation ticked up a bit too, but stayed within the Reserve Bank's target range of 2–3%.
Okay. Our sources also flagged some other key economic events this week that are worth keeping an eye on.
Yeah, absolutely. For today, May 28th, besides the FOMC minutes at 2 p.m., we already had the MBA mortgage rate data this morning, and later we get the API crude oil stocks at 4:30 p.m.
And looking ahead.
Thursday's big one is the second estimate for Q1 GDP growth, and then Friday is packed. Core PCE price index, that's the Fed's preferred inflation measure, plus personal income and personal spending data, all month-over-month numbers.
Right. Those Friday numbers especially give you a real snapshot of the consumer, how much they're earning, how much they're spending, and what inflation looks like from the Fed's perspective. Often big market movers.
Definitely critical data points to watch.
Okay, before we try to tie all these different threads together, let's just quickly touch on some recent company performance numbers and new market entries that were mentioned. Specifically, earnings and IPOs.
Sure. On the earnings front, for reports out May 28th, it was a bit of a mixed bag from the companies highlighted in our sources.
Like who?
Bank of Montreal, BMO, reported numbers that actually missed expectations on both revenue and EPS. But then you had IICO, that's HEI, which beat on both top and bottom lines, and Okta, OKTA also came in ahead of expectations for revenue and EPS.
So yeah, a mix. And what about companies looking to go public? Any IPO news?
A couple things. Two SPACs were confirmed today, Champions Gate acquisition and Kochev Defense acquisition.
Okay, those are the blank check companies. Anything else?
Yeah, for Thursday, May 29th, there are a couple of estimated IPOs mentioned. One is Fuxing China Group Limited, described as a Chinese zipper maker, interestingly, with some revenue details noted. The other is Wintergreen Acquisition Corp., another SPAC, this one focused on media, tech, and telecom.
So just briefly, what can paying attention to these earnings reports and these IPOs tell you, the listener?
Well, earnings give you that granular look at how specific companies are doing, their health, right? And if you track several in one sector, you start to see trends. IPOs, on the other hand, kind of show you where the money is flowing, where investors see future growth, which sectors are hot, what kind of valuations new companies are getting.
Okay, good perspective. So we've covered a lot of ground today, from the overall market lift on trade hopes to these really specific company moves, GameStop's Bitcoin bet, Salesforce's big buy, retailer warnings, then zooming out to consumer confidence, Fed expectations, inflation data, even space flights and brain implants. Let's try to connect some dots here. What are the big themes weaving through all this news?
Well, one theme that just keeps popping up is trade policy and tariffs. It's everywhere. It boosted the whole market today, right? But then it's explicitly blamed by Macy's for cutting forecasts. It's hitting ASML's value hard. It's a risk for Shein's IPO.
And it's casting a shadow over that jump in consumer confidence.
Exactly. It's just pervasive. Another huge theme is companies making really significant strategic shifts. You see growth plays like Salesforce buying Informatica. You see these, frankly, kind of head-scratching moves into alternative assets like GameStop and Trump Media with Bitcoin.
And restructuring, too.
Yeah, streamlining like global payments, selling units, or Honeywell getting ready for that big breakup with Elliott pushing them. Plus, leadership changes at Stellantis and Instacart clearly aimed at tackling specific problems.
And we also saw that clear intersection of business with broader social and political trends.
Absolutely. Those retailer warnings about DEI and ESG blowback are a prime example. And maybe even Trump media's pivot towards crypto has a political or cultural dimension alongside the financial one.
Right. And finally, you can't ignore the innovation narrative, can you? The progress, but also the hurdles.
Definitely. SpaceX's test flight reaching space but facing issues, Neuralink getting funding and FDA status but still in early human trials. It's that constant push-pull of progress and challenge.
So the goal here, as always, is taking these individual news items, a company buying crypto, a retailer lowering guidance, consumer sentiment shifting, a test flight having problems, and seeing how they all fit together into this, well, incredibly complex and fast-moving economic picture that you're trying to navigate.
Precisely. It's about seeing the forest and the trees.
It definitely pushes you to think critically, doesn't it? Looking at all these varied reports, what questions pop into your mind about where things are headed? Are these just blips, or are they signals of maybe deeper shifts happening in certain industries or the economy overall?
Yeah, those are the crucial questions to ask as you digest all this.
Well, we've certainly taken a deep dive into a really rich set of sources today, hitting everything from market moves and company strategies to economic data and tech milestones.
It definitely paints a picture of a very dynamic landscape, sometimes contradictory, always evolving.
So here's a final thought for you to consider based on everything we've discussed today. Given these diverse signals, you've got trade optimism lifting markets, rising consumer confidence, but then also company-specific struggles tied to tariffs, these bold or risky strategic pivots, ongoing geopolitical risks. How might you personally try to assess the overall level of uncertainty right now? And what could that assessment mean for your own thinking, perhaps even your decisions going forward?
Something to definitely chew on after listening today.
Thanks so much for joining us for this deep dive into the sources.